Today's show is brought to you by TestCube. Are flaky tests slowing your Kubernetes deployments? TestCube powers continuous, cloud-native testing directly inside your Kubernetes clusters. Seamlessly integrate your existing testing tools, scale effortlessly, and release software faster and safer than ever. Stop chasing bugs in production. Start preventing them with TestCube. Check it out at testcube.io/cloudcast.
Cloudcast Media presents from the massive studios in Raleigh, North Carolina. This is the Cloudcast with Aaron Delp and Brian Gracely, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome back to the Cloudcast. We are coming to you live from the massive Cloudcast studios here in Raleigh, North Carolina. Hope everybody is doing well. October 2025 is upon us. We are into the fourth quarter and getting towards the end of the year. So starting to wrap up some things, starting to think about some bigger picture stuff, starting to think about some end of year shows and so forth. But today, as we kind of look at a weekend perspective, I kind of want to dig into this topic. And if you've been listening for a while, we kind of keep coming back to ideas and sort of build on ideas and so forth. And, been thinking about this idea that we are kind of in this transition between sort of the second half of the cloud era, if you will. I don't know how long the cloud era will still sort of consider it an era, but sort of in the second half of the cloud era, the beginning of the AI era, in particular the Gen AI era. And, you start to think about, okay, well, what might happen, right? Because it's one thing to sort of watch the growth of one era happen, and you watch transitions happen, and you watch new business models emerge and competitors emerge and all sorts of, new usage patterns and all sorts of stuff. But it's interesting to think about the transition because, one of the things that happens with transitions oftentimes is the companies or even just the technologies that led in a previous transition don't always end up being sort of the leaders or the winners or the things that carry through in the next transition, right? So you have that as sort of backdrop. And then you start to think about, kind of what's going on with some of the largest companies. So for example, the large hyperscalers, the AWS, Azure's, Google's, Oracle now, they're spending so much money, or at least proportionally spending very, very large amounts of money on CAPEX, but in particular CAPEX specific to AI. And what I really kind of have been thinking about is, what happens to their cloud business, right? What happens to their focus around their cloud business? And I know to a certain extent people would say, well, AI is going to be an extension of their cloud business, and that might be the case, right? I know that was sort of the argument that AWS made for a while. Adam Selipsky made that argument to a certain extent. It feels like Matt Garman is kind of making that argument, and Andy Jassy sort of makes that argument still as far as what their strategy is. You might argue that, for example, like Oracle is going all in on sort of being an AI-specific provider, right? And I think we're going to see a spectrum between the hyperscalers and so forth. So I want to kind of dig in after the break, looking at what might be the transition, especially for the largest hyperscalers and the big bets that they have to make and the transitions and strategy they have to think about as we go from the sort of first half to the second half of the cloud era and overlapping with the AI era. So we'll dig into that right after the break. We know that AI helps us work faster and more efficiently. But what if it could also help us live longer, healthier lives? We want to introduce you to Interconnected, a fascinating new podcast about the tech behind the tech. This week, they dive into the revolution that AI is bringing to medicine. In episode 2, world-renowned cardiologist Dr. Eric Topol and decentralized pioneer Jim Nasser explain how AI is enhancing disease prevention, supercharging personalized care, and giving patients control of their data. Listen to Interconnected today, wherever you get your podcasts. And we're back. And as I mentioned at the top of the show, I kind of want to explore this transition between, again, one era to the next. And not so much just like, who might win or what might be the technology. We talk about that every week. And I think we touch on various aspects of it. But was thinking about sort of an interesting aspect from a strategy perspective in that, if you look at some of the larger cloud providers, so if you look at AWS, look at Amazon as a company, you look at Google as a company, you look at Microsoft as a company, right now they're all sitting on about $100 billion in sort of cash flow on their balance sheets. And then they throw off, quite a bit of cash every quarter and every year. So, it's a growing number, but again, they manage it against sort of the strategies they have and the trade-offs they have to make in terms of where they're going to spend that money, right? Whether it's going to be on new investments, whether it's going to be on human capital, whether it's stock buybacks, lots of big options they have. And again, they've all got different approaches to how they're looking at it, right? You factor in somebody like Apple as well, sitting on $200 billion worth of cash and big decisions to make and so forth. And it feels like for the most part, a lot of what it feels like they're focusing on is AI investment, right? So you see them all talking about how much they're investing in AI. A lot of that is in data centers and in GPUs and sort of CAPEX spending around that. We'll put some links in the show notes. There's a lot of folks who do a very good job of sort of tracking all those numbers. But what's interesting is to also think about, okay, they all have that, and then they all have this, sort of pre-AI cloud business, right? That we've covered for a long time. AWS being a leader in that, probably at around $100 billion a year. Microsoft and Azure being second, probably in the $65 to $70 billion a year range. Google being third in that, in the 40-ish billion dollar range. Maybe they're a little $50 billion range. And then Oracle was, more in the like 10 to 12 or $15 billion range. Now, where it gets interesting is, if we were a year ago or 2 years ago, we would have been talking about sort of growth rates of the cloud providers, growth rates of that business without really talking about AI. We would have been talking about, how are they going to grow from the perspective of basically how do you take as much as you can out of people's data centers, which is a $3-4 trillion a year spend, and move that into the cloud, right? And it's a conversation we've had a long time. We joke a lot about, are we in the first inning or are we in the third inning of this sort of cloud evolution? But now, because AI is such a big deal, and the expectations around AI are such a big deal, we're constantly sort of talking about, okay, how much are the largest companies sort of investing around AI? In some cases, because they are building their own models, they're hosting their own models. So this could be Google, for example, right, with Gemini and the things they're doing. It could be they are building out so that other companies, large partners, i.e. Microsoft and OpenAI, can host their stuff and train their stuff on their cloud. And then they get sort of secondary benefits of that in terms of integrating with their services or just as a direct revenue stream from one of the largest, model trainers and so forth. You have folks like AWS who have taken more of a balanced approach of sort of going, well, AI is a primitive of what we do. It's not, sort of everything we do. And then you've got folks like Oracle who, had a business in cloud, not really in infrastructure, but now feel like they're very much sort of all in on beyond just their SaaS business, kind of being all in on being a GPU provider, but a very large GPU provider, i.e., very big involvement with an OpenAI and others, right? So we're beginning to see more of a spectrum of how they're going about it. And it got me kind of thinking, and then again, if you include like Apple, again, huge amounts of money, we don't necessarily talk about them all the time because we tend to think of them as more of a device company, but in terms of being, gigantic and having a ton of cash flow, have made a decision not to make huge investments in AI. And there's probably some rationale for doing that. But so we're now starting to see this sort of broad spectrum of the cloud providers or the largest technology companies, the ones with a ton of cash flow, a ton of cash on hand, and are they, what decisions are they making in terms of where they invest? And we could sit here and do an analysis of like who's investing the most in AI and GPUs and data centers. We've done that before. There's plenty of people who do that. I'll put some links in the show notes and so forth. But it got me thinking, if, for example, you may have decided, so let's take AWS, for example, right? AWS, the AWS part of the Amazon business is now the largest profit center, hugely important to the stock price. It helps drive a whole lot of things, drives cash flows and so forth. But, on the other hand, not necessarily now the leader in cloud, the leader in sort of non-AI cloud, but not necessarily the leader in AI or bringing AI as a new capability to the cloud, right? And so you get into an interesting sort of scenario, I imagine, with them in which you kind of have to ask yourself, okay, do we need to step up the amount of spending, investment, prioritization around AI, right? So do we have to, go acquire our way into moving into more of a leadership position. So, for example, do they need to acquire an Anthropic, for example? Right? I know we know they have partnership relations with Anthropic. How much would an Anthropic acquisition be? You'd have to guess north of 20 billion, maybe closer to 30 billion. Who knows? Maybe it's even, closer to 50 or 60 or 80 billion. Again, it would depend on revenues. It would depend on multiples. I mean, we know OpenAI is raising money and doing secondary trades at like a $500 billion valuation, at least in some portions of it. So maybe Anthropic is a $100 billion company, right? $100 billion type of acquisition. So, again, it would be, you wouldn't be an all cash deal, but Amazon obviously can do things in stock, and they can do things in debt and all sorts of stuff. So maybe that's the way they go about doing that, right? That becomes the largest priority. Maybe the largest priority for them becomes, just kind of stepping up their stockpiling of GPUs and broader ability for, the lead they have in the marketplace for customers with just workloads to be able to bring AI to those workloads, right? And maybe that's the case, right? But the other question I sort of asked myself, sort of in the non-cloud or non-AI realm was, what would the market have to look like for them to maybe start doubling down on software, right? Because if you think about, for example, like Amazon, or even if you think about most of them, I mean Microsoft, maybe you could argue, very good SaaS business, because obviously they have the Office 365 portion of the business, and some other aspects that are kind of an extension of the enterprise and things that they know how to bundle, so Teams and other stuff like that. Does Amazon start to move from being a primitives company, a cloud, obviously define the cloud, but a primitive centric company, to one that becomes a bundling company, right? And again, you go back to the old Jim Barksdale quote that was, there's only two business models. There's bundling and unbundling. AWS's model so far has basically been unbundling of IT capabilities into primitives that people could then bundle themselves in some way, shape, or form to go and build whatever services they wanted to build or consume them however they wanted to. But, do they begin to look a little bit like a bundler, to begin to look a little bit like private equity, in which you can go looking for cash flows that you can then, optimize and begin to raise prices around? And it kind of got me thinking, and I thought, well, maybe that is an approach they take. Now it becomes a trade-off approach, right? Because, any investment they might be making along that way. So, for example, what I mean by that is, do they start to say, hey, instead of just being a primitives provider, a cloud provider for a whole bunch of the SaaS companies out there, which, they continue to do, will continue, you would fully expect them to continue to do. It's a highly profitable business. But do they begin to start to say, okay, if some of my moat around that is starting to erode, if some of my moat around, will AI be the next jumping off point? Maybe what they need to do is also begin to bundle some of the really critical SaaS services that customers pay a ton for, that are very sticky, that are highly, highly profitable, that may not necessarily be innovating at huge levels anymore. I mean, sure, you could, Salesforce would probably argue with you that they're innovating around AI agents, or ServiceNow would argue with you they're innovating around AI agents. But the bulk of their business is not necessarily AI. It's, being very good at the thing that they do in their domain, right? So, it got me thinking, okay, what might that look like? And realistically, like, what would those numbers look like? Because again, it was just a kind of a speculative thought that I have of, like, maybe we would see something like this. It's not a, sort of saying like, oh, we've given up on AI, or it's not saying like, hey, we've given up on sort of being innovative, that whole sort of day one perspective. But maybe it is a, hey, the possibilities that AI doesn't pan out at the level that people are making these investments in, like, that's a possibility too, right? Like, maybe it, not saying that AI doesn't work, but maybe it takes a lot longer than we thought. Why couldn't we start to build, even bigger cash flow types of things in the near term, or even in the intermediate term, that would, as sort of the second phases of AI are rolling along, or people start to figure out use cases, we're in a better position to sort of, be there and take advantage of that, right? So again, just kind of complete theory, but sort of trying to think outside of the box of just like, will all investment just be data centers, GPUs, models, that type of thing, right? And I went into this, sort of like wasn't totally sure what this would look like. And so what I did was, and I'll put some links in the show notes for this. I started looking at like what are the biggest 100 or so SaaS companies, both public as well as not yet public companies, so private, but announce some amount of revenues and so forth. And it was sort of an interesting exercise to go through. I think, what you start to realize is, so the list, starts with people like Palantir and Salesforce and Intuit and ServiceNow. Those folks, from a market cap perspective, I mean, Palantir, $421 billion, Salesforce, $230 billion, Intuit, ServiceNow, almost $200 billion, Shopify, Adobe, CrowdStrike, all north of $100 or $150 billion. And so really the first page of the top 25, gets you from Palantir at $421 billion all the way down to like Samsara, Guidewire, F5. There's a bunch of them from about 17 to 25 are all in the $20 billion range, right? So, maybe those are the types of companies that they might go and acquire. The issue is, at the, let's say 20, let's just take like HubSpot here at slot 17, $27 billion market cap, assuming you pay a premium on that. Let's say it's a, 30% premium on top of that. You're looking at let's call it a $40 billion acquisition, and HubSpot might be doing, $1 billion a year in revenue, right? So, you're paying quite a premium for that revenue. And then the question becomes like, okay, what else could you bundle with that, right? Because the thing that you want to look at is like, if we're doing this, we want this to be a bundling exercise. And so as I started going through this, it was like, okay, a lot of these probably far too expensive to get into. Maybe somebody like Workday is an interesting one at number 11, but Workday is a $66 billion market cap company, right? So, if you're paying $75 or $80 billion or maybe even more than that, huge thing. What are you bundling with that with, right? Do you really want to pay that sort of, do you really want to put that sort of level of investment, again, as a trade-off versus, investments around the AI space for just sort of CRM, HRM sort of stuff? Well, questionable, right? And so then what you get into is you kind of go through there, and the first 25 or so, you're like, well, some of these, an Amazon already does, right? So Snowflake, Amazon sort of has a competing service, or a Datadog, it has a competing service, or Zscaler has a competing service. MongoDB has a competing service. And you go, okay, well, those are probably definitely off the list because they already do that. And then you start to look at sort of the next batch of ones that are on there. And, this is sort of where you get into, okay, what else is on there? Once you get down below, 20 billion in market cap, now you're talking about companies that have, less than $1 billion in recurring revenue. And in many cases, half of that number. So, an Okta at $16 billion may be interesting, right? Like very sticky security, very, very sticky. Google just paid a ton of money for like Wiz. Okay, maybe that's sort of interesting. Twilio at $16 billion. Again, maybe sort of interesting, maybe more interesting back when, it was sort of a hot company and some of the things around, SMS and everything was going on. But, you start to look through this and you're like, it's really hard to figure out like what might be the bundling things, right? Might be the bundling things. And then the question you start to ask yourself is like, would you want your bundling things to be selling to the same people that likely are buying AWS services? So sort of IT related things, line of business related things. Does that become like a GitLab at $8 billion? Maybe, right? Like GitLab is already sort of a big bundled thing. It's about software developers, but it overlaps a number of things that AWS already does, right? JFrog, $6 billion, again, overlaps with those things are. So the more I sort of dug into this, and again, it might sort of tell me, hey, that was a bad theory to begin with. But right now, what it sort of tells me is, at least for the things that an AWS would likely bundle, or even if Google or Microsoft decided they want to sort of diversify from being really, really focused on AI, the things that they would likely bundle, they sort of do pieces of those things today, right? Like now, are they better than GitLab, or are they better than like I said, somebody else? Maybe not, right? Like they may or may not be better than those companies. But do you want to pay a 30x premium to pick up an Atlassian? Do you want to pay a huge premium to pick up a Datadog? Probably not, right? So then the next sort of question you sort of ask yourself is like, okay, well, maybe if they're not bundling that sort of stuff, maybe they look to bundle a number of the other companies that are in a market segment that they could begin to expand. And I think the first one that sort of jumps out is you start to see a number of companies that you could kind of acquire, bundle, begin to bundle, that are around financial services. So everything from SPS Commerce, Q2 Holdings, Workiva. There are a number of companies that you go, okay, well, maybe that could be 20, $30 billion of acquisition, and really kind of go after financial services and sort of say, well, okay, I've picked out a market segment that, while it has, a lot of stable companies in it, but it also is sort of under threat from, the sort of new financial services, FinServ type of challengers in there. Maybe that's the space you get into. And that became sort of interesting. And again, now we're starting to get into, like I said, how many of those would you potentially have to acquire and try and bundle? And then the question becomes like, what, how much of an adjacency does that become to that business? And this is where it's sort of interesting, because obviously the spend in Microsoft, with Azure and AWS and Google and so forth, is much more than just sort of IT line items. It is in the line of business and C-level sort of buys. But then the question becomes like, well, do you have the sales force to go do that, right? Is that a thing you want to do? Do you get there? And so the more and more I looked at this, the more I was like, well, I could see that happening. I could see them beginning to think like, how would I, for the cloud portion of my businesses, not AI, that becomes, very sticky services. I mean, a lot of these businesses are very sticky in organizations. They're probably not going anywhere anytime soon. They throw off cash. They might be overvalued at this point in time, but do you start to sort of look at them, if interest rates, let's say they tick back up again, do they become interesting? And I think that the challenging part is you would have to do a couple of things really well. Number one, you'd have to figure out, what are we willing to make as a trade-off versus the extreme pressure we're getting right now from the marketplace, from competitors about, not spending every available dollar on AI-related things, data centers, GPUs, models, data scientists, and so forth. And then the second thing really becomes, could you start to pick off some of these companies? Sure, absolutely. You'd figure out, what premium you might want to look at. You might want to, because again, you're sort of kickstarting, instead of you building that yourself and offering it, you're essentially saying, look, I'm acquiring a whole bunch of companies a bunch of customers who are very sticky to that. But the question becomes like, how many of those things could you bundle? Because I think that's where, if you could figure out some interesting bundling things or some market segments that you could really kind of go after, then you avoid yourself, deeply competing, as an individual company against the 5 other SaaS companies that do a similar type of thing. And, so it's by no means, as I sort of look at this a little bit more, it's by no means a simple sort of strategy. Could it potentially be an interesting one if, the markets shift and get a little softer than they are right now, or, some of their competitiveness becomes a little more challenging, but you could really help it out instead of their small sales force going after stuff. You've got, the backing of a Microsoft sales force or an AWS sales force or so forth. Yeah, potentially. But it's not obvious what those things would be, but it does feel like, that is a space that likely starts to emerge just as, the more and more companies are looking at where do I spend my dollars? How much of it has to be on an AI related stuff? How much of it is going to be on sort of maintaining the things that we already have? And if you look at, for example, like what Broadcom did with VMware, we start to see that sort of strategy, playing out more. Essentially, not just private equity companies buying, companies that have, mature technologies with very good revenue streams and sticky customers, but do we start to see the hyperscalers start to act that way? And I think that'll be an interesting strategy to watch. It'll be interesting to see if it does happen, how it's communicated, because like I said, so much focus is you have to stay at the very leading edge of what's going on with AI. Your spending on AI is very closely tracked and very closely tracked against your competitors. But again, the question becomes, do you think that is the best use of your dollars? Again, you're basically betting, will I win in AI? Because AI feels like a sort of, right now everybody's sort of betting it as a winner take all. And then the question becomes like, will there be a number two? What would number two or number three look like versus, continuing to grow very, very high margin business around other software, and then potentially sort of coming as a second or fast follower once wave 2 of Gen AI starts to take off and we get beyond the use cases we have today of, chatbots and developer assistants and document summarizing and some of those types of things and so forth. So anyways, it was an interesting exercise to kind of go through that today. I was kind of digging into it. I don't think it's as simple as I was starting to think about, like for the number of things that I mentioned, whether it's the high multiples that exist today, the trade-offs as to how much you could do, but really kind of getting into, how much bundling, how many things could you kind of pack in together that get you into new markets, that get you with newer customers, not necessarily, name of customer, but buyer within a customer. And I think it would be an interesting exercise to see if you could figure out from, say, the top 100, top 75 or so, what would an interesting acquisition strategy be? What's a number that would be interesting? Is it, in the $20, $30 billion range that you might acquire 5-6 companies or something like that? And then what would, a bundled offering look like? Is it something that is horizontal, as many of them sell today, or is it something that has to get into the vertical specifically? So anyway, something I think I'm going to kind of keep an eye on, dig into a little bit more as we go along, but it was an interesting exercise to sort of think through, what might be the next thing if it's not just, full steam ahead into the new era. Like, how do you continue to grow the previous era? How do you continue to, have, relationships with your customers that you can expand upon and begin to evolve, like just the way that we've seen other, maturing software markets or maturing technology markets happen in the past. So anyways, with that, just something to think about. I'd love to hear your feedback on if anybody's sort of thought down that path or if they have any ideas about how that might shake itself out. So anyways, if you do, show at thecloudcast.net. We always love to hear your feedback and so forth. And with that, I'm going to wrap it up. Talk to you next week.
Thank you for listening to The Cloudcast. Please visit thecloudcast.net to find more shows, show notes, videos, and everything social media.